Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Send some good white light, and then need a lot of good energy down in that Houston area, man. That is a wicked storm. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 5, NASDAQ up 17, S&P's up 1. Flat market out there. That's what you have, folks. You have flat market, sideways market, light volume. Gold contract. No such thing in the gold contract, though. Gold contract up 19 bucks. $1,316. Silver up 42 cents, $17.55. Both gold and silver broke topside once again. You get gold's a confirmed ABC structure in the way up. 1327 is your first number. Bottom line, the way that this gold contract is trading, folks, it finally really went with some strength. What I expect you're actually going to see out here, gold is going to make that run for the high that was out there on the July of 2016, which is 1396. And when you build cars like we have inside the gold market, we've been building cars here since the first swing high of April 14th. It had the volume. It kept pushing with volume, pushing, broke twice last week, topside. They couldn't shake it down last Friday. That was a pretty amazing last Friday. What ended up happening, someone sold into the market in 1 minute 2 million ounces of gold. Bottom line, the market ate it, spit it out, put it in its pocket, bought more. Bottom line, you get the gold contract wants to run up to this almost $1,400 area. Silver, same setup inside silver. Silver was up 2.5% today. Silver market broke topside, 54,000 contracts. Silver looks like it's going to make the run now to 1887. Same type of setup also, is that built a bunch of cars, had a rough day, a rough few minutes on Friday. Bottom line, couldn't hold it down. Guess what? You can't bust them down. You're going to bust them up. Bonds. What do we have at the bond market? Same setup here. The bond market is just remarkable, folks. You know, you have the Fed out there saying that, yes, they're going to go up on short-term rates. Well, the market doesn't believe them. If you take the Fed fund futures rate, what has happened now is this. You got to see this. This is pretty incredible. What has happened since Friday till today is that the March meeting, so picture this, we're in August, right, coming up to September. What had happened is that the first time that this was over 50%, your probability of another short-term rate hike of 0.25%, March 21st, it was like 50, it was fluctuating between 52 and 54%. Well, guess what? We don't have it's not over 50% now until next June. These are the numbers. You have a 4% chance on the meeting September 20th. You have a 6% chance November 1st, 33% chance December 13th, 32% chance January 31st, 46 March 21st, 46 May 2nd, 54% June 13th. That's pretty incredible, folks. And this bottom line, this bond market, guess what? They're buying bonds hand over fist. More demand, less supply. King dollar, get the peanut butter, get the jelly, get the toast. It's done. King dollar has been on a one-way trade since January 3rd. In fact, well, if we look at this, let's look at this, because this is so intriguing how this whole thing shook out. You had election night. Here it is. Okay, so election night, what we had is this. Well, first off, the dollar started moving way before that, okay? So the dollar was trading at 91 in, May of 2016. You went sideways for quite a while. By August of 2016, so that's a year ago, right? We were at 94. Crawled up, and, then in November, you talk about fast and furious. We were at 95. Election, it went from 95 to 98. January 3rd, it went up all the way up to 103. From January 3rd on, it's busted. It's busted, not only busted down, it's broken support, and it's broken support convincingly with wide price spread, with volume. And now what you have, this consolidation that we had been in inside the dollar index had started, folks, January of 2015. So we had been in a consolidation with the bottom of the consolidation being 93, the top of the consolidation be 100. And you can really learn something about how this dollar, when you have a breakout and you get a failure. We broke topside, it failed. When that happens, you're going to try to break the bottom of the consolidation. Now, we broke it. So bottom line, when you break a large consolidation like this, what you do is say, okay, where's the next stop? Well, the next stop happens to be the highs of 2008 and the highs of 2010. And it's great that they're there, because if they weren't there, then I'd be saying right now it's going to 78. We should get some support at this 88 area. If we don't, and you get to 86, then get out of the way, because then you're talking about a $73, which would be pretty intense. It'd be like, okay, what is going on with our U.S. dollar? Now, if we spend dollars in the United States, that's cool, okay? Bottom line, your wealth doesn't get affected as much. You're spending that dollar overseas, your wealth is getting affected dramatically. I mean, big time, okay? Because the bottom line is that if we go look at the euro, what you're going to see the difference in the euro in the last 3 months is that we were at 103, 105 euros to one U.S. dollar. We're at 119, almost 120 right now. This broke topside. The euro looks like it's going to be running to 140. That is a big number, folks. So bottom line, whether we want vacations over there, things get a lot more expensive. The oil market. So this is deviant, no doubt. The bottom line, you get a huge storm. Oil goes south. Gasoline goes north. And what's this all about? Well, we broke a swing point. You broke it with volume. This wants lower price. We broke the $46.62. You went $46.15. That's setting up that oil wants to get out of $44.62. And more than likely, what that is all about is that we're going to be using, we have a lot of oil, and we're going to be using less oil. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 5. NASDAQ up 17. S&P's up 1. We're going to be right back.